If you've been waiting for the Kelowna real estate market to stabilize and for prices to come down, there's a chance that that might happen over the next couple of months. But will prices change significantly, or will they just continue to flatten out like they already have? In today's video, we'll discuss whether the single family homes market is becoming a buyer's market and what that could mean for buyers and sellers. Let's take a look at what the Kelowna real estate market did in July. I'm Tyrell Boake, a realtor in Kelowna and the Okanagan, and if you're new to the channel, I help you navigate the real estate market and provide you with useful information so you can make informed decisions that make sense for you. And if you get any value out of today's video, make sure to hit that like button and subscribe so other people like you can see this video too. The average price of a single-family home in Kelowna rose in July to just over 1.1 million from 1,084,000 the month before, which really isn't a significant increase in selling price and is basically in line with the average price in the last 5 months of around $1.1 million, give or take a few dollars. The average price has been fairly balanced since about February of this year, but it is up from last July by about 2.5%. If we look at the benchmark price, it's showing the same stability recently as well. The benchmark price in July was relatively unchanged from the previous month, decreasing by only $100 and is up less than 1% from 1 year ago. But we can see from this graph that the general trend since 2020 has been on an upward trajectory. Prices definitely seem to be consistent month over month lately, and that balance in the market is pretty healthy. This balance doesn't signal that prices are going to go down anytime in the near future, but there are other factors that we need to consider, like months of available inventory and the list to sale ratio to get the whole picture. Months of available inventory measures how many months it would take to sell out the existing inventory if we didn't list anything else based on the monthly sales numbers, and that number has been climbing in recent months. Basically, 0 to 3 months of available inventory signals a seller's market, and there will be pressure on prices to go up. If we have 4 to 6 months of available inventory, that's considered a balanced market. And if there's anything over 6 months of available inventory, that's considered a buyer's market, and there could be pressure on prices to come down in a buyer's market. We are right on the cusp of a buyer's market at 6.4 months of available inventory, and that's up from the 4.5 months of available inventory that we had just 30 days ago. The list to sale ratio is calculated by taking how many listings sold against the amount of available inventory in any 30-day period. If we are seeing that number anywhere between 40 to 60%, we're in a balanced market. If the list to sale ratio is 40% or less, it means we're in a buyer's market. And if 60% of the listings on the market are selling in any 30-day period, that would be considered a seller's market. Over the last couple of months, we've seen that number rate at about 40%, which means we're right on the cusp of a buyer's market again. And it also means that 60% of the homes that are listed right now are not selling in any 30-day period. We're inching closer and closer to a buyer's market in Kelowna, and if these two inventory indicators keep trending the way that they are towards a buyer's market, we might just find ourselves in a buyer's market for single-family homes in Kelowna. What does all of this mean for a buyer? Well, what it means is you probably have an opportunity to negotiate some off the listing price of most homes, and it also means that there's more opportunities and more inventory for you out there than there was in the last 18 months, giving you more choices. And if these trends continue, we may see some downward pressure on prices. But if anything right now, I think what we're going to see is more stabilization in the prices, but more choices and more opportunity for buyers. And if you're a seller, what does this mean for you? Well, with 60% of homes on the market not selling right now in any 30-day period or not selling at all, you really need to make sure that your pricing is on point, that you're priced appropriately for the current market, and that your home is marketed well and presented the best way possible. Let me know what you think in the comments below. Are we headed for a buyer's market again where there's going to be downward pressure on prices? Or do you think that the market's just going to continue to stabilize and do what it's been doing for the last 6 months? If you'd like to book a discovery call with me to explore your real estate options in the Okanagan and Kelowna, there's a link in the description directly to my calendar so you can book a time that works best for you. That's my market update for this month. Thanks for watching. We'll see you next time.